Hey guy, in this video, I would like to share with you after you fill everything for your LLC is the next step to actually I just fill LLC and I spend so much money for these startup costs or expenses, but I haven't made anything. Are these going to actually turning to a taxable for these costs or not? It's really good question. So we actually about to learn that together because I actually pay for one of the tax services in order to help me everything, but for the other company, not through the partner with the Teller brands. Technically, they send me the spreadsheets in order to fill it out and also like bookkeeping. And it's have to do manually, which is uncomfortable. And they also send me the app to actually submit all the invoice. And by far, I'm not really a fan of this because it's a waste of time. Because you have to do that and then you pay them, and I pay them almost $3,000, which is ridiculous. But the partner with Teller Brands with 800 accountant, last time I have a chance to actually spoke to them because it's still out of my budget right now because been paying so much for startup costs to start an LLC and haven't made anything. So I put it on hold and wait until the right time to maybe start it. However, the brand, they were trying to 800 accounts and they were trying to convince me to upgrade or purchase because it's another additional cost that you purchase a software where they actually can bring everything directly from your bank and to the software, which is you don't have to do anything for that, and it will save you time and money at the same time. It's the whole year is only 800 something. It's less expensive than whatever I pay for the other one. However, the other business they do have it's like weekly call with all the members, and at the same time they have Facebook group where you actually can just ask a bunch of questions in there and they would answer within 24 hours. So it's also pros and cons about two things. All right. So my point here is I was actually looking up my invoices so to make sure that how much I spent so far now to put it on my startup costs here. And as you see, it's like some of them break down really manually, really transparency. And also when I put it on so far, its total expenses that I spent only for this is already $2,178 for just one business. And the question is, learn how some of your business expenses could be a tax deductible. So we can read together and learn more because I love reading and I love new information. Are company formation costs tax deductible? So starting a business can be costly, but many expenses are tax deductible. With a basic understanding of what you can claim, you can make some significant saving, but tax deductions don't happen automatically. You must know the rules qualify. So are company formation costs tax deductible? Let's find out. First questions, are company formation fees tax deductible? Yes, formation fees are part of your startup costs and are tax deductible. So are expenses related to your formation such as accountant fees, drafting incorporations documents, completing your articles of organizations and LLC filing fees? But the IRS set a deduction limit of $5,000 in your first year. However, you can also deduct another $5,000 for general startup costs. So yeah, technically, if you start business, you can deduct up to $5,000 in your first year. For instance, I only spent $2,000 for my business so far for filing fees, but can cost additional thing like, the form or software with the tax deductions. And also if you do bridge mortgage, you have to spend for like renting and buying supplies. At the same time, with people who work online, you also have to buy certain thing for renting office and also supplies for your workspace. All that can be deductible. What is the difference between startup costs and formation costs? Good questions here too. So formation costs are any expenses you pay when creating your LLC or corporation. Okay, including filling an article of formations corporations with your Secretary of State's office. Startup costs are expenses you pay when investigating a business idea, creating your idea, or buying an existing one. But there are limits to what you can claim as the startup cost. Look at those next. Okay, so basically, startup cost is where you do like research and like find out is that a lot of people interested in that market and trying to create a business plan and reach out to different people like attorneys or expert to actually help you to form a business, anything like that. So what are business startup costs? For startup costs to be deductible, they must meet two requirements. It's an expense your business incurs or pays before its first day of active trading. It is an expense related to your market and would be deductible if you were already running your business. Okay. This means you can only claim an expenses for something necessary for setting up and ordinary for running your business. Here are some legitimate startup costs you might incur. Expenses when analyzing potential products or markets, fees for professional like accountant, lawyer, and consultancy, I told you. The marketing and advertising costs for promoting your business. So for instance, it's like you run IG or Facebook and try to do giveaway or something to promote your business on social media, or even you go to print out some, advertising flyer, poster, etc. So you can actually claim that too. Any expenses for training new employees? Okay, yeah, because when you starting hiring, your company is new and you have to hire an expert to train your employee. You're not making any profit yet. You lose money and spend that expense to make sure your employee are up to ready, to serve the clients. So that's also another expenses to consider as a startup cost. Expenses regarding securing prospective customer, distributors, or suppliers such as transportations and accommodations. All right, what can you write off when starting a business? When you start your business, most formations and startup costs you incur before trading are tax deductible. Any assets you purchase, such as equipment, lands, or buildings, are capital expenditures that are not tax deductible. Instead, you recover those costs through depreciations or depletions deductions annually. Tools you use in your business are only tax deductible expenses if they cost under $200 per invoice and their life expectancy is 1 year or less. Machinery parts or for maintenance are also deductible, but must only keep equipment working and not improve it. The limits of startup deductions. In your first year of business, the IRS allow a deductions of $5,000 in formation costs and $5,000 in startup costs. If your total costs are $50,000 or less. Okay. A business that spent over 50,000 in startup costs or formation costs must reduce the 5,000 deductions by the amount of their expenditures exceeds $50,000 and amortize the remaining amount. Amortizations lower the value of your intangible assets such as business loans. But you can also amortize business assets by depreciation, such as work vehicle, and use the value loss as a tax deductions over the next 15 years to reduce the business tax liability. You'll amortize costs using IRS Form 4562. Okay, this is just a general reading. You can ask for more information with your accountant. Special rules for one-person LLC. The IRS has different rules for single-member LLC, for example. Only multi-member LLC can amortize startup costs. Single LLC can only deduct $5,000 if their startup costs are less than $5,000. An LLC whose startup cost exceeds $5,000 cannot deduct any percentage. Instead, you must capitalize your deductible expenditures when you reserve your LLC. Be aware that IRS is clear about what expenses you can deduct relative to your business formation costs, with no exceptions. You must know what you can and cannot claim as the tax deductions. To ensure you do, we will finish with 3 types of deductible expenses that include startup and formation costs. The 4 types of deductible expenses. First, investigation expenses. You occur deductible costs when investigating a new business venture, whether creating a new business or buying someone else. These costs can only determine whether a business is worth investing in, and includes the product's analysis, market survey, business idea validations, and traveling expenses you incur during time. Any costs you incur when purchasing a business are non-deductible capital expenses. Here you will amortize the charge and claim them back later. Getting your business ready pre-opening. Before your new business generate a profit, you will have to pay an outgoing cost of setting up costs. These costs can include equipment, hiring employee, software, domain, trademark, website, licenses, and permits. And you might need services like a marketing consultant, an SEO strategy, and social media advertising. These costs are tax deductible, and you should include them when calculating your setup expenditures. 3, organizing the business. Organizational costs are what you incur when you form an LLC. It can include operating agreement, article of organization, state fees, tax and legal professionals fees. Organizational costs are capital expenses that aren't tax deductible in your first year of business. However, the IRS allows multi-members LLC, partnerships, and corporations to deduct these expenses. For post-opening costs are expenses costs that are used after the organizations in opening your business. Some business insurance and banking fees are deductible. However, not all of them. To learn which post-opening costs are deductible, please check out the IRS business expense page or consult an accountant. Conclusion: most small business startup work on tight budget, and every dollar counts. When you start your business, perhaps consider employing an accountant, because, as I said, tax deductions are not automatic. You will need a profession to ensure you claim back what is rightfully yours. The portion of our website is informational purposes only. Taylor Brand is not a law firm, and none of the information of this website is constitute or is intended legal advice. All statements, opinions, recommendations, or conclusions are solely the impressions of the author and provided on an as is basic. According, Taylor Brand is not responsible for the information or is accurate or completeness. So they just actually list out, and it's really, makes sense, because when I talk to the accountant, well, they mentions that these costs can be tax deductible. So like I said, when starting out the business, you do need an accountant in advance. Do not wait until really late at the end to hire an accountant, because you need to make sure like what's go right. And also, before anything going crazy, you need to know that ahead of time. And at the same time, they will actually help you to save time, keep track of, bookkeeping and all the transactions, invoice, dispute or chargeback, all of that. And then, when you close to report your tax, you don't have to sickle for accountant at the same time, like spending your time like months and days to actually file all the invoices in the past to fill out or keep track of your process. We'll consider more waste of time. So I think I might reach out to 1-800 accountant again to register or pay for their products and software. So, it's easier. I don't want to spend my time to put in manually, hand by hand, with these spreadsheets from different services, which is I only pay, and that can consider as like a tax write-off or tax deductions too. Because there are two businesses going on, so each business have their own tax deductions. So I hope that I can ask them more questions on that, and it will save me time. So if you think about, any questions, you can contact them. But if you don't have money to hire an accountant in your company because you're a small business owner, highly suggested to buy a memberships with these partners, so it's reduced the cost for you when you starting out. So hope this help. And if you have any comments and have a knowledge about it, feel free to leave a comment below and let us know what you think. And I hope that I can learn more from you about this in the future as well.